Welcome, everyone. We are happy you could join us for Bigbank's investor webinar today. We are hosted by Bigbank's Chairman of the Management Board, Mr. Martin Lentz, and the Member of the Management Board, Mr. Argo Kiltsman. We will start the presentation with an overview of Bigbank and later continue with the introduction to its public offer of bonds. And we will finalize this hour with a live Q&A session. If you would like to ask questions to the company during the presentation, please use the Q&A section underneath the presentation in Zoom menu by clicking on the Q&A button. But with this, I am now handing it over to you, gentlemen.
Hi, and thank you. Nice to see you all here on this webinar. Today we are introducing the first series of bond issuance under our 25 million euro program, which was approved by Estonian Financial Inspection this Monday. Today, this presentation here will be as marketing material. So if you plan to do an investment, then this investment should be based on the information given in the prospectus, in the financial statements, annual reports, quarterly reports presented on Bigbank homepage. This program and emission is happening in the full Baltics, so Estonia, Latvia, and Lithuania. The materials are not for sharing in US. In today's presentation, we are also using forward-looking statements as plans, beliefs, estimates, future predictions. And as everything what we talk about future can later on, we might find out that actually the things did not go exactly as planned. So for sure, these future statements should be taken somewhat with carefulness, and we cannot guarantee that they are also right if you look back to them in the future. So legal disclaimer made. Let's start with the presentation. As said, I'm Martin Lentz, the chairman of the management board for Bigbank AS. I have been working in Bigbank since 2013 when I joined the bank as head of Estonian business unit. And throughout the years, I have carried different roles, and from 2019 have been the chairman of the management board. And here with me today is Argo, so maybe a few words also from your side.
Thank you, Martin, and hello, everybody. Yes, my name is Argo Kiltsman. I have been working in Bigbank for 13 years in different positions, all related to finance area, and now have been head of finance area for 8 years and a member of the management board, and also head of finance area for 6 years. So I will give word back to you, Martin.
Thank you. So if to start about Bigbank, Bigbank is an Estonian bank, which is headquartered in Estonia. We have in Estonia 2 offices, one in Tallinn, another in Tartu. Both of them have around 150 employees. We also do have branches in Latvia, Lithuania, Finland, Sweden, and Bulgaria, where we also do have physical offices. And we do operate on a cross-border basis also in Austria, Netherlands, and Germany. If you talk about the ownership of the bank, then the bank is owned by 2 private individuals, Mr. Parvel Pruunsild and Mr. Vahur Voll, both of them equally owning 50% of the shares. The bank's supervisory board has 6 members. Mr. Sven Raba is the chairman of the supervisory board, and in the supervisory board there is also Mr. Vahur Voll, Mr. Andres Koer, Mr. Jaan Liitmäe, Mr. Juhan Jääger, and Mr. Alari Aho. The bank structure is consisting the branches, which were mentioned before. And we also have different daughter companies, Rüütlimaad, Rüütli Property, Papiniidu Property, Pärnumaad 153 Property, which are dealing with different real estate investments of the bank, both, for example, the office buildings where the bank is situated, but also office buildings or commercial premises acquired for the investment perspective. And we have also done several investments into agricultural land. The company Balti Võlgade Sissenõudmise Keskus does not currently have any active business operations. And as here you see the branches of the bank, where also the bank has offices, then in Germany, Netherlands, and Austria, the bank operates on the base of the cross-border licensing. And this is the form of the credit institutions licensing, where in case you don't operate as a branch, but you operate as a cross-border basis, then you cannot have physical employees working in these countries, and our services are there available through our call center, internet bank, website, and we do use different partnerships for onboarding the customers, meaning some identification, either digital tools or also physical ways how we can identify and verify the customer. If we look back to the history of Bigbank, then in this autumn, Bigbank gets 33 years old. The bank, or the not yet as a bank, but the company was established in 1992, and the credit institution license was acquired in 2005, and then the name of the bank was Balti Investeeringute Grupi Bank, so Baltic Investment Group Bank. In 2007, trademark Bigbank was taken into use, and also later on the bank's name as such was changed, or kind of the company name. The time period between 2005 and 2010 can be looked as the big important milestones there were the starting of offering the deposits on the cross-border basis in Germany and Austria. And based on this funding, also the bank opened the branches in Lithuania and Finland. Later on, in the years 2011-2018, the bank also opened the branch in Sweden, launched the cross-border service in the Netherlands, and also opened the branch in Spain, which was 10 years later closed. In 2014, the bank had a significant change in the business model. If historically the bank was offering rather high interest rate loans, consumer loans, then since that time the bank started to compete, for example, in the Baltics with the local large universal banks, and often the customers got better pricing offer for the consumer lending than from their home banks. Since 2019, we strongly entered the corporate banking, and 2020 we launched home loans. And now if we look at the growth of the bank in last years, then the growth of the bank has been strongly been related to the growth, especially in the corporate lending portfolio and the housing loan portfolio. The other part of the bank growth has been through the, of course, deposits. And in order to finance the bank growth, the bank has started to offer, in addition to the term deposits, also the saving deposits, and is offering those throughout the countries of operation. So if we look at the recent milestones, then we have launched the different deposit products in Lithuania, Latvia, Bulgaria, started offering also corporate deposits in Latvia and Lithuania. Then we were included to systematically important credit institutions by Estonian Central Bank. And the reason for that was that our strong growth of the deposits in cross-border markets. And what it meant for the bank is that we got additional requirement for additional capital buffers to be held, and additions to the internal governance, and had to establish additional committees. At the end of last year, we launched current accounts to our private customers in Estonia, and during this year, we are also working towards launching them in Latvia and Lithuania. We became the direct member of SEPA Instant Payments. Historically, we were indirect members, so we had middlemen in between. And also, actually, this year in April, we are also the direct member of the SEPA regular payments. We have had during last 2 years also several bond issues, either T2 bonds, which we also having at the moment, and also 81 issuances which have been closed. And also we launched the green leasing product for corporate customers in the Baltics. So these are maybe the like highlights to bring out. And if you look at the product portfolio of the bank, then we can divide it to 2 categories. On the left side, there are the services for the private customers, on the right for the business or corporate customers. We have payments and settlements, different loan products, either consumer lending, housing loans, mortgage loans, credit card, leasing products, and different deposits for the private customers. And for the corporate customers, we are offering different investment loans, development loans, agricultural and forest land loans, different leasing products, and also our corporate customers can open deposits at Bigbank. But that said, Argo, please give us the overview of the financial results.
Thank you, Martin, and I will gladly do. As you can see from these graphs, our recent growth has been really substantial. In 2019 and 2020, when we respectively started with corporate lending and also with housing loans, it really kickstarted us, and now we have had very big growth numbers in loan portfolio, which is the main asset category in our balance sheet. So from there on, the growth numbers have been really in double digits, and it continues even today. How have we financed it? With deposits, deposit portfolio is growing simultaneously with our loan portfolio, and we are having 2 products which we are looking closer in the coming slides. And yes, with our company growing as quickly, also our number of employees have grown. Now, by the end of first quarter, with these 560, of course, this growth hasn't been in similar level in percentages as the loan portfolio or deposit portfolio, but still we are having a bigger company regarding the number of employees as well. Now let's look at the more recent figures and concentrate on the end of first quarter financial results and figures mainly. So here are the loan portfolio pies. On the left side, you can see how our loan portfolio is distributed between different collaterals. Almost 62% we have now loans secured by real estate. This is a direct outcome of concentrating more on corporate loans and housing loans. So this percentage is growing each quarter right now, because these are our focus products right now. And our historically most important part, unsecured loans, 31% without collaterals, is slightly dropping now in each quarter. 7.4% have different collaterals than real estate. Geographically speaking, we have the biggest loan portfolios in Estonia at 42% and in Lithuania 35%. Also, Latvia has a quite big share, 16%. And after that come branches which have much smaller shares. Finland with 6% and Sweden and Bulgaria combined basically 1%. And yes, we have reached 2.3 billion euro level by the end of first quarter in total loan portfolio, and it now roughly distributes two-thirds and one-third, when two-thirds is for private customers and one-third for business customers, corporate customers. And actually from this two-third also, quite roughly speaking, it is one-third of consumer loans and one-third of housing loans. If you look now the graphs here, we can see that the growth volumes are still continuing. By the end of 2024, our loan portfolio was 2.2 billion euros, and now by the end of first quarter, there is additional 100 million euro growth. So if we took it as a basis for the coming quarters as well, you can see that the growth is basically not slowing down very much. The growth numbers are still very big. If we look now on the right-handed graph, we can see how our portfolio, delay day portfolio percentages of our total loan portfolio. From here, we can see that, yes, by the end of first quarter, the portfolio in delay has a little bit increased compared to the end of 2024 and also compared to end of 2023. But the growth hasn't been substantial. And also, if you look at the, let's say, most critical part of a loan portfolio in delay more than 90 days, when there is a 0.1 percentage point growth only. So this portfolio is 2.5% of our total loan portfolio. So yes, slight worsening, but the overall figures are still okay. And especially considering from the fact where we once were in the, let's say, in the years where we didn't have housing loans and corporate loans yet, when compared to these figures, we are in a very, very good place with our in delay portfolio figures. How we finance our business with deposits? We have two main products for that, term deposits and savings deposits. Term deposit is a classical deposit with a fixed term, what the customer and bank agree beforehand. Savings deposit is a flexible product, which is very useful for a customer to put all the free resources in the deposit and taking this out rather flexibly as well. This rather flexibly means that the customer doesn't need to take out the deposit as a whole, can just use it partly, and also always put some additional amounts in. And taking out the money takes 2 to 3 working days, so it is not exactly instantly usable, but quite instantly, meaning that it's only a couple of days delay. And with that, also a very good interest rate is offered by Bigbank with this product. So it's actually a very product which is very interesting for our customers in recent years. And you can see that basically half of our deposit portfolio is the savings deposit portfolio. And yes, these both products have been growing in some quarters. One product is more interesting for the customers, in another quarter, another, also depending on the rates, of course, and the overall interest rate environment. But recently, you can see that rather the savings deposit has grown more than the term deposit in first quarter. So it is a direct outcome of our current interest rate environment, when customers rather want to have flexible sources when to fix the rates for the long term. So how our deposit portfolio is distributed between different countries. From the right-handed pie chart, you can see that our main deposit countries are Netherlands with 43% and Germany with 38%. Also putting together here Austria at 4%, we can say that 85% of our deposits come from cross-border countries. And it means that 15% is coming from branches where we also have lending activities. This percentage is actually a little bit growing since we are also now giving out the deposits and both deposit products basically in all our branches where we lend out money. So we want to have bigger shares there, and this is a little bit growing compared to overall deposit portfolio. Regarding deposits breakdown by maturity, you can see that yes, 45% is basically on demand, which is basically the savings deposit amount, and the main maturities afterward up to 3 months and up to 12 months. So if you put all these together, then 85% of deposits have up to 1 year maturity, and 15% is more than 1 year maturity. And now let's look at our main figures of our profit and loss statement from the end of first quarter, and also some additional most important figures. First, let's start here with some financial highlights. First of all, 9.8 million first quarter net profit was actually a very good result. It is by 3.4 million better result than we had in the first quarter of 2024. Here, the main reason will be described in the upcoming slide, why the difference is so positive and so big. What else? We have had now current accounts open for more than 1 quarter. By the end of first quarter, we started to open them in December 24. So with 1 quarter and a little bit more, we have now more than 3,500 current accounts opened, which is also a very nice start from where we can build on and have more and more customers in and more current account money also in. So what we have done more, we have included 4.0 million additional capital, which has been 81 capital. Now we are having a presentation here regarding T2 capital. NPS, which is a score which shows how satisfied our customers with us, is also on our expected level and a little bit above, so we are happy about that. And our loan portfolio growth also kind of repeating here, but mainly comes from home loan and business loans, plus 51 million, plus 44 million, and consumer loan portfolio is growing much more slower, additional growth 12 million in the first quarter. And we covered already the deposit portfolio, where the growth was in the first quarter 159 million euros. If we look at this profit and loss statement, the most important figures, when we can see that in 2024, the net interest income increased compared to 2023, but at the same time, yes, the interest rate environment started to worsen, meaning that the decreasing Euribor rates needed to be compensated by bigger loan portfolio. So we were able to do that, but at the same time, our cost side increased due to the fact of growing business volumes, and also our net loss allowances were increasing. So all in all, in 2024, we had 32.3 million euro size profit, which was below our record 2023 40.6 million level. However, now in the first quarter in 2025, we can see that we have had better results than in the first quarter in 2024. How it happened? First of all, our net interest income has been now stable, which means that yes, the interest rate environment changes have been continuing, meaning that the Euribors are still dropping. Our interest income is lower from there, but at the same time, our portfolio keeps on growing, and from where we earn more. And yes, we have been more successful in converting the, let's say, the interest rate environment changes to deposit customers as well, being more efficient there. And we were able to, let's say, limit the deposit interest cost so that the net interest income overall result is on the same level compared to last year first quarter result, which was actually quite a nice and good result for us, considering how the interest rates have been changing in recent quarters for a while. Regarding salaries and operational expenses, there have been in salaries growth, in other expenses some reductions compared to 2024, but the main difference comes from credit quality and costs related to credit quality. From here in this table, you can see that compared to 2024, our first quarter net loss allowances were 1.1 million euro better, meaning lower than in 2024. But additionally, we also did 2.4 million less provision expenses for the same credit portfolio, meaning that all in all, the difference compared to 2024 first quarter, we had 3.5 million euros less credit quality related costs. And this was a major reason why our results improved so much. And this is mainly due to payment behavior improvements in consumer loans in all three Baltic states. And this trend is continuing, and we are happy about that. Again, a lot of numbers. I don't go through all of them, but from above you can see the most important balance sheet figures. We talked about already loan portfolios and deposit portfolios. So total assets have now reached by the end of first quarter 2.9 billion level, which is also, of course, a record level for us. And at the same time, our equity has increased to 270 million euros. Regarding ratios, let's concentrate only on few of here. What we are looking the most, and which is also our strategic goal, is to have return on equity grown to 20% level. We were the closest for that in 2023, where we have 17.7. Last year we had 12.5, and now in the end of first quarter it has back improved to 14.6%. So it's an improvement. We are not quite there yet, but we are making the steps. And another ratio I want to highlight here is cost to income ratio. It has been throughout the periods on quite steady 42% level. Which is not a figure we are, let's say, super happy about, meaning that, of course, we can always do better. But if compare this figure to other banks in Estonia or Europe overall, we can state that this is a very decent and strong figure. And in this view, we are happy about it. So there is a room to improve, but actually we are doing already well there. And one more slide about capital buffers. Here I want to explain this picture to you a little bit as well. We have 3 blocks of columns which show different capital, let's say, level ratios. First one is Common Equity Tier 1 capital ratio, which is the capital, which includes the capital, which is the most basic one for the banks. And for our cases, it is the common shares plus retained earnings. So this is what we earn ourselves, the basic level of capital. The Tier 1 capital ratio shows the ratio how much we have T1 capital, meaning that this is Z1 capital plus additional 81 bonds in our cases. And the total capital ratio shows all capital instruments together. It means it is T1 capital plus T2 capital, which is the T2 bonds in our case, and which is the presentation we are making here, meaning that if we include the T2 bonds, then our total capital ratio will improve due to that. So bank needs all 3 levels of capital for operations, and the most efficient breakdown would be the case if we have all 3 types of capital in optimal amounts. So that's why, of course, it is the reason why we are having this T2 bond emission right here, right now as well. And from this picture, you can see that we are well ahead of regulative thresholds as well of internal thresholds. But since we are growing still quite rapidly, we need, on top of our earned profit, which is our Z1 capital, also additional instruments, T1 capital and T2 capital. And this is the reason why we are having this presentation here and why we have T2 bond emission. But yeah, good to see that we are well above the thresholds and we intend to be like that also in the future. With that, thank you for listening to me, and I will give the word over to Martin Ju.
Thank you, Argo, for giving us the overview of the financial results of the bank. And now I'm giving you an overview of Bigbank strategy. So our current strategy period is 2022 to 2026. And the goals of this strategy period have been the growth. I guess that if you looked at the numbers introduced to you by Argo, then you can see that I believe we have well succeeded in growing both loan and deposit book of the bank. We are customer focused. For that also, I think what is the key difference is with many banks, but also many other organizations, is that in Bigbank, each employee should have one of the goals related to improving the customer relationship with the bank. Is it then the customer service employee? Is it IT developer or product development person? All of the people in Bigbank are working towards the improvement of the customer lives. And we aim to earn 20% return on equity. Unfortunately, during this strategy period, we yet haven't reached this target. The highest has been in 2023, when it was almost 18%. And as Argo told, this year, first quarter, it has been 14.6%. If you look at the pillars below, then these are the key cornerstones of the strategy. First of all, the bank growth should come from the housing and corporate loans, for the reason of them having like longer schedules and ability to give the bank long-term interest income, and of course generate also efficiency. In order to grow the loan book in these segments, we do provide our customers with reasonable product conditions, and this is not only the interest rate of the loans, but also the other terms and conditions for the loans. We try to find and enter underserved customer segments. We do want to be a risk leader, but not from the perspective that we are taking always the highest risks. No, but rather that we try to understand what are the risks with each specific customer, each specific project, and that we know better than others how to mitigate those risks. And of course, in order to grow the loan book in corporate and mortgage loans, we do need competent and customer-focused employees who provide excellent and fast customer service. And as you also saw in the numbers, now we can say that the bank has grown its corporate and housing loan book, so that we can almost conclude that 1/3 of the bank loan book is corporate loans, 1/3 is housing loans, and 1/3 is consumer loans. And where we were coming some years ago, that the bank was only issuing consumer loans. Then the second pillar is actually how to improve the efficiency of the capital and how to kind of reduce the risk weights. And for that, we want to take into use the internal risk-based approach to the capital requirements. And this is a highly regulated process. I cannot promise that we are reaching the moment that we can take into use the IRB during the strategy period, but clearly we are working towards it. Currently, we are using the standardized approach. What is also the good thing about it is that in order to actually get some better efficiency from the capital point of view with IRB, you need to have a very good quality loan portfolio. So it also sets very clear targets until what the IRB is effective, and this is also driving our choices on what kind of customers we want to finance, what kind of collaterals we accept, and so on. Then a third pillar is about the real estate investments. As you also saw on the introduction of the bank structure, then we have different daughter companies which are dealing with the real estate investments. If you talk about agricultural land investments, then we are expecting a long-term collateral value increase. And we are somewhat less keen on the running cash flow. If we look at the commercial real estate, is it an office buildings, is it some shopping malls, then we do target actually long-term and strong cash flow. So this is the main kind of difference between these investment lines. We also do consider investments into green energy in order to raise the capital return. And we do use alternative ways of financing, meaning that we also, with our real estate investments, customers of other banks. What this gives in addition to the bank to be also oneself investing into real estate is that it better lets you understand also our customers. Is it then in the agricultural sector? Is it in the real estate sector? Because having your own investments, you also have your own skin on the market, and you basically see what's going on, what are the goods, what are the bads, and how the economy is at some moment developing, or what changes are happening on the market. The fourth pillar is about daily banking and about offering current accounts. Argo already introduced you. By the end of first quarter, we had more than 3,500 customers who are the current account, who have a current account in Bigbank. And the strategy is to widen both the countries we do offer the daily banking products, but also, of course, the product offering, adding on debit cards, mobile apps, and all different functionalities. Of course, the key thing regarding current accounts is that it helps to improve the marketing efficiency. So you build up a long-term relationship with the customer, and at some moment also probably provide the bank with cheaper financing. Currently, we are also standing out with our current account offer. So I believe we are almost the only bank in the Baltics who is offering without limitations to the private customers 2% interest rate on their account balance on the current account. So mostly the banks do not offer anything, or it is a very limited offer up to some loans, up to some balance sum. It is kind of the interest paid, or it's on the limited period. So I can say that currently the bank's current account offering is very, very attractive also towards the customers. And if you look at the fifth pillar in this green circled box, then here are some of the principles. So we attract and keep the talents through great leadership and supporting personal growth. So what we would like to have is that if somebody in the future is asked that where did you have a best manager, then the people would name somebody from Bigbank. We do build a sales and business-oriented organizational culture where is high banking competence, and we do value the importance of the regulations and following the regulations. But within the regulations, the bank's business is still to make business. We do take care about our brand, and we want to improve the brand consideration and also, of course, have a high recommendation for Bigbank. We mainly have grown organically, but we also do consider non-organic growth opportunities. We do use scaling. We have own banking software, Nest, which helps us to quickly scale the products to the existing, but also to new markets. And we use lean management principles and technology to improve the processes that create good value for both the employees and our customers. Regarding climate neutrality, we take it as an opportunity, not as a restriction. And in order to enable the bank to earn good return on equity, we need to be very cost efficient in our operations. And also, as you saw from the numbers presented by Argo, then I can say that our cost to income ratio slightly over 40%. I think it's quite a good place to be in the banking sector if you look on the wider picture. So I guess that this is also one of the places where, in general, we stand out of the market. But this is a quick peek into Bigbank's strategy. Argo, I'm giving the floor back to you. And if you have later on any questions regarding the strategy, feel free to ask.
Thank you, Martin. Indeed, let's end this presentation with maybe most interesting topic for you, terms and conditions of our current bond offering. So it is T2 bond, subordinated bond. It is a first series of a new 25 million T2 bond program. The issue size is 3 million euro, but it can be increased to 8 million euros, meaning it can be increased by 5 million euros, maximum 8 million euros this time. The bond maturity is the same, of course, what we have also for the similar bonds in recent offerings, 10 years, but with a possibility to call it from our side back after 5 years if there is a permission from FSA. So if we get the permission from FSA, it can be a 5-year bond for investor, but the nominal maturity is 10 years. Nominal price of one bond is 1,000 euro, and also it can be subscribed only by one bond piece. So it is a minimum subscription is 1,000 euros. We have quarterly interest payments in 15th of September, December, March, and June, with the first interest payments coming up in 15th of September. And we intend to have it, of course, traded in Nasdaq Tallinn Baltic Bond List, as we have all our T2 bonds. And the expected trading day is 13th of June, end of this month. And the most interesting part, the interest rate, we have a coupon rate of 6.5%, which is actually the same level what we had our last series of our last program end of last year. It was a fairly successful subscription for us and emission for us. And considering the fact that the interest rate environment has been constantly dropping compared to end of last year, and also looking at our results, our strong position, our good future outlook, and also the other similar instruments what we have had emissions in this market recently, we see with 6.5% as a rather attractive interest level. And it is definitely possibility for potential investors to decide if it is a suitable instrument for you. But we see that the risks and this coupon rate are well attached and in line with each other. So if you have, of course, any questions regarding our bond terms or conditions or anything else at all, then now it is the time to start asking.
Thank you, Argo. Thank you, Martin, for this presentation. We would like to indeed move over to the Q&A session, as we have currently not received any questions into the Q&A box. Please feel free to use it. Type in any questions that you might have. We would give you a minute to do so, but in the meantime, I would cover the ending details. The recording of the webinar will soon be available online on Nasdaq Baltic YouTube channel as well. Please follow Bigbank announcements to stay up to date with the company's news, or visit Bigbank's investor page, which is available at investor.bigbank.eu. And if you have any questions later on in the upcoming days, reach out to the company via email using the address investor@bigbank.eu. But now let's wait a minute or so, and if any questions arrive, then we can continue. Seemingly you have made it happen so that you answered all the questions. So I give the floor back to you for the closing words. Thank you from my side.
So thank you for participating on this webinar. If you're making any investment decisions, then please do them based on the prospectus and the financial results published on our homepage. And if you have any questions, feel free to write us. We are more than glad to answer them. Thank you.
Thank you.